The epic run in the silver price and gold price are just getting started right now. In this video live stream, we're going to look at a big number of reasons that indicate to us that we could be just in the first or second year of what likely could be a 10-year, a decade-long bull run in the precious metals. And there's evidence of that being the case in the past. But there's even more evidence that right now we're in an even more extreme position where we could see higher silver and gold prices. Look, I'm not a financial advisor. Don't make any financial decisions, but I am your friend. And I love the fact that you're joining me down here in the virtual basement today. Please subscribe to the channel, give the video a thumbs up, and I'll be back in the real basement here before you know it. But let's start with JP Morgan. Then we're going to hear about big news out of India. Then we're going to hear about big news out of Australia and even bigger news. Yes, it finally happened here in the United States, all of which can put a big smile on the faces of us precious metals investors. Let's start here. We have this from the Wall Street Gold. Breaking. JP Morgan, this is breaking news today, are forecasting gold could double by the year 2028, targeting $8,000 per ounce. They cite growing demand as investors hedge against stock market chaos, and the smart money is rotating early. The herd will follow. The herd of what, I ask you, my fellow basement dweller friends? And again, thank you for being down here with me. The herd of the sheeple, your Uncle Fred, your Aunt Mary, your next door neighbors. We call those the sheeple. And when they join us, it's going to be very, very exciting. But let's go to more good news on this same subject. This comes from MSN. This is mainstream media. MSM, mainstream media, but MSN, they're also covering this story. The headline here says, gold, I will get it back on there. How do I close? Anyway, at the bottom of the screen, you see the headline, gold just stumbled. A JP Morgan strategist says the metal could double in value. But it's not just JP Morgan, because they talk about our friends at Goldman Sachs as well. Hold on a second. Let's get to that. Where is it? Here it is. I'll highlight it. My highlighter's not working right now. In blue, since its biggest one-day drop, and we're going to look at that too, guys. We're going to cover what happened on Monday and why we don't have to worry about that happening again for a long time. One-day drop and over a decade on Tuesday. The debate surrounding whether gold will regroup and push higher. Goldman Sachs, okay, we're going to get to JP Morgan next. For one, is sticking to its end of 2026 target, that's next year, of $4,900 per ounce, and sees upside risk from central bank as well as an institutional investor demand. So Goldman Sachs is calling for $5,000 gold by the end of 2026. I rounded up, but they're also saying that the risk is to the upside, meaning it could even go higher. And then we have this that we just talked about, but a little more info in here. That segues into the call of the day from JP Morgan strategist led by Nicholas, I can't even pronounce that name, Panaramagatsoglou, whose team says the price, I bet the writers hate having to write his name down, the price of gold could more than double in 3 years as investors increasingly use it to hedge equities. So what they said was basically people are moving to gold, and what happens for gold is good for silver. We're going to talk about Australia. We're going to talk about India. We're going to talk about the United States. But investors are moving to gold to hedge their investment bets that they have in the stock market. And we get data all the time. There was one, I don't know, it was Bank of America. Somebody just the other day said if just 0.5% of the money in the world that's currently invested in U.S. equities were to go to gold, that gold would like instantly go to $6,000 per ounce. So everywhere we look, it's absolutely crazy. But let's talk about why Monday was no fun for gold and silver investors. They knocked silver down, what, $2 or $3 per ounce. Gold's been got whacked, but gold is still in very good shape. However, look at this, and this is why we don't have to worry about that happening again for a very long time. No guarantees, but statistically, what we do know is this. Here's a great article from, I think it's Metals and Miners. Yes, gold's beatdown yesterday was a once in 63 years statistical anomaly, meaning what happened yesterday should only happen once every 63 years with zero fundamental justification, right? There was no fundamental change that happened in the world to affect the price of gold or silver, and designed with a purpose. It was calculated, brutal, and stunningly effective on the gold market. And then it's got a couple quick paragraphs. Yesterday, the gold market experienced a statistical anomaly of epic proportions. The price of gold and silver plummeted by over 6%, a violent move that, according to statistical analysis, represents a 5 sigma event. In plain English, this is a move so rare that it should only occur once every 63 years. It was a calculated, brutal, and stunningly effective on the gold and silver market and the collective psyche of global investors. It was all a lie. And the key takeaway here is basically, guys, there was no reason why silver got whacked. There was no reason why gold got whacked. But remember at the chart that we've looked at many times, right? Any big bull market that's ever happened in gold or silver. The most recent one we looked at was the big upswing. Silver from 2001 through 2011 went from under $5 per ounce to $50 per ounce. But during that 10-year period, there were many, many times when the price of silver got whacked down 10%, 9%, 12%, I think even like 25, 30%, but it's never going to go straight up. I know Monday was painful, but nonetheless, right? It's part of the game. And the important part is if you make up your own mind, right? Again, I'm not a financial advisor, but if you believe in the long-term story for silver, you got to be prepared for some tough emotional times like we went through Monday and stay the course, right? What you don't want to have happen is if you really believe in something long-term, let your emotions get the best of you and make an emotional decision, which is usually never a good idea when you're talking about investing. And here's some more proof of what happened on Monday from the silver market from our friend, the dude who shared this. I wonder how much, this is great. I'll just put it in his words. The silver market traded 859 million ounces on Monday. That is the equivalent of more than a whole year's mining output. Okay, the mines working 7 days a week, 365 days a year, generate less silver production than the paper market traded in 1 day. To manipulate the price down a few fiat dollars, the COMEX had 480 deliveries. The LBMA, the London Bullion Market Association, 1,112. Yesterday is the most obvious sign of silver and gold manipulation I've witnessed. Wow. Did the plunge protection team come in? And again, this data is from Tuesday, October 21st. Make sure I got you on the right screen, which I do. Let's run out since we're live here. I'm recording this at 1 a.m. Paris time and just get an update on what's going on in silver and gold. All right, that's the S&P. That's not what we want. And I don't have you on the right screen, which I do now. Sorry about that, guys. Well, you didn't miss anything because I'm still working my way to the silver and gold price. Yes, okay. So silver right now in the futures market at $48.52. I mean, look, we got to remember, let's just look back, okay? 1 year ago right now, we were at $35 silver. In April of this year, so just 6 months ago, we were at what, $29 silver. So the price of silver has essentially gone up, what, $20 since April alone. Pullbacks are normal. Pullbacks will happen. We got to be prepared. It's all going to be okay. Now, let's talk about what's going on in India, right? Remember, India, 1.4 billion people in India. Big breaking silver news out of India. And there's two reasons why this is important. But now apparently the banks in India, okay, are letting people use silver as collateral for loans. This is huge, huge news, because in the past that had only been the case for gold. So now if you live in India, and there are 1.4 billion people in India, they use their metals as an investment, as a store of value. Way different. It's like ingrained in their culture. And now they can use silver, which is a big deal. But there's a bonus factor on all of this. And let's get up the right article. Here we go. Make sure we got the screen shared, which we do. Okay. Look at the headline. I think this is one's from the Silver Academy. India unleashes silver as banking collateral with a 10-to-1 gold to silver ratio. That's the other. So they're letting people use silver as collateral, but they're doing it at a 10-to-1 silver ratio, declares silver a global monetary metal. India sets silver as collateral for bank loans, capping gold at 1 kilogram and silver at 10 kilograms, creating an industry-shaking 10-to-1 monetary metal benchmark. Okay, what's crazy about this? Think about it. Essentially, right, in India, your silver now is as good as cash. Okay, you can take it to a bank and get a loan, I think up to like $3,000. But remember, in India, that's a lot of money to a lot of people. And it basically converts your silver into cash, but it's doing it at a 10-to-1 ratio to gold. Okay, the current price is like what, 85-to-1? So what it's basically saying, what India is monetizing metals, okay, you could make that argument, but they're doing it at a 10-to-1 ratio. If silver was at a 10-to-1 gold to silver ratio right now, what, it would be $400? $400 per ounce. I've got the thumbnail for this live stream video. I'm going to release this here in just about a half hour, which will be probably evening for most of you that are in the United States. So let's keep an eye on that. You know what? I forgot to take a look when we were out there also as well. Okay, let's make sure the price of silver has not gone to $400 per ounce. We're going to go to KITCO and look at the spot price right now live as I'm recording this, almost $49 per ounce. And we need to look at the, hold on here. It's been a little bit since we've looked at our friend. Oh, here we go. Great information from the Oriental Ghost from overnight. He said, in night trading on the Shanghai Gold Exchange, silver, which is their physical trading market, leads the silver higher than at the Shanghai Futures Exchange. So we are still in this backwardization. I'm not going to pull the charts up again, but I checked right before I went on. The spot price in London right now is indeed higher than the futures price in New York. That means we're in backwardization. But when we look at, and that's the same case in China, right? The physical market is higher than the futures, right? Yes. So it's in backwardization there, which means there's people concerned about actually getting the physical metal. And sure, hopefully I do have you on the right screen. If we look at the data, the most recent data from October 23rd from China, this is the Shanghai Gold Exchange. Oh, maybe we can see it on here. Interesting. Yes, we will. There's AG, that's silver, on the Shanghai Gold Exchange. So this is the spot price of silver. And if we go down here to silver on the Shanghai Futures Exchange, we can see it's just a hair higher. So they're actually technically not in backwardization, but in balance. So interesting developments going on all over the world. Okay, next up. We're having a lot of fun following what's going on throughout the world as people wake up, right? The sheeple are waking up. We're going to look at some crazy news reports coming out of Australia about silver and gold. Before we do that, I want to say thank you. And I feel bad because my virtual background, I'm missing right there my typical sign from channel sponsor First Mining Gold. They're a Canadian gold development stage company with 2 massive projects in Canada. They've supported me, Ron's Basement, Precious Metals content for a couple years, but I owned the stock prior to that. Stocks are risky. I'm not a financial advisor. Do your own research. But I love First Mining Gold because they've got massive amounts of gold in the ground in Canada. And I think that's very, very valuable. I think that as they go through the development stage with these projects, that the market will recognize that there's a lot of catalyst, a lot of room for capital appreciation. You can learn more about them at firstmininggold.com. Of course, wrong finger right there. I want to say thank you to First Mint. I'm going to bring you out to their website. And by the way, Keith Neumeyer is the founder of First Mining Gold, but Keith Neumeyer is also the CEO of First Majestic Silver. Everybody in the precious metal sector typically knows of Keith Neumeyer. He's super respected. So he owns he's the CEO of First Majestic Silver. First Majestic Silver owns First Mint. It's a mint in Las Vegas, Nevada, where they transform the silver that's dug up by First Majestic Silver into world-class silver bullion products. I have all of these at the house. I love them all. They're all unique. There's the Year of the Dragon. There's the Buffalo round with the beautiful Indian head that I love. There's the Las Vegas round. Look at that roulette wheel. I love it. And then, of course, the Year of the Snake. But there's also a lot more. If you go to their store tab up here, you can see their Folds of Honor, which supports fallen and disabled members of the military and first responders community. They're survivors with academic scholarships. They got some cool products there, but they have bars, rounds, everything, and free shipping on orders over $299. And there's a discount code, VIP, like very important person, VIP RB, Ron's Basement. Okay, check them out. It's great company, great products. I appreciate all the sponsors. I appreciate you guys supporting the sponsors. They make my content possible. They allow us to get together down here in the basement. Now, did I beg you to subscribe? If you're still here, which I know you are, subscribe to the channel. That way you can come back and join us here for more. Let's go look at Australia because there's just crazy, crazy news coming out of Australia. And make sure we got you up on the right screen. We'll start here, and it gets better as we go along. Guys, this came from Make Gold Great Again. All silver bars in Australia, Australia's big, real big, are on back order across several bullion stores I checked, including the Perth Mint. Only ABC Bullion has bars for 15% more than others. And he brings up a great point. There's a reason why we want to stay on top of this. Imagine how much more silver isn't being bought as it's simply not available, right? It's sold out. We're hearing that from all over the world. And now let's move on to this one, another one from Make Gold Great. Again, he's on top of this Australia situation. Thank you, Make Gold Great on X. Silver dealers in Australia are calling customers, offering 15% over spot. And look at this news report that came from, Australian TV, King Kong 9888, another great contributor to our community, to the community, brought this one up. Let's see if we can get this, see if I can get this on full screen for you. And
a modern day
here we go.
Rush,
Gold Rush.
The world's oldest treasures.
Unprecedented.
Unprecedented.
In the last few weeks.
That's Tina. That was Tina from the Perth Mint. That's their national mint.
Buy gold, even though the price of the precious metal has never been higher.
I say once you buy the first piece of gold, you're hooked.
We have Diwali festival, so it's
Indian Diwali festival.
Buying a gold.
Seen by some investors as a safe haven, business for ABC Bullion is booming.
Most people might be coming in to buy $5,000 to $10,000 worth of bullion at a time.
For others, now is the time to sell.
I'm not doing money at the moment, so here, come down, cash in.
You're going to regret it.
Time ever, according to the gold chart.
Gold traders say they've never been busier.
Gold traders say they've never been busier.
Insane, to be honest.
Insane.
Reading the jewelry drawer might uncover a shiny surprise for these earrings, ring, bracelet, and charms. $1,500.
Not bad at all.
The price of gold has been on a dazzling upward trajectory over the past few years, hitting a record high on Friday. And while some expect the rally to continue, others warn the shine could fade.
The last time we saw a rush like this, The price
The
actually
Motley
probably
Fool.
halved from that point. Again, not a prediction, just a warning.
It's hard to say what's going to happen next.
hoping it'll be good as gold.
Because you know why, guys? You know why it's hard to say what's going to happen next? Because things really are different right now. During the 2001 to 2011 rally, we were not in the position we were. India and China weren't as dominant as they are right now. The United States, and we're going to talk about crazy news out of the United States, was not in the fiscal or monetary situation. We weren't having the geopolitical turmoil going on during the 1970s. During the 1970s, silver went from like $1.50 to $50 per ounce. Okay. We're in a very similar situation right now with stagflation. But on top of that, China and India in the 1970s, they were a fraction of what they are now. Now they're setting the price for gold and silver. I'll go ahead and say it, right? They are the gold and silver market. So yeah, it's hard to say what's going to happen. Well, we can listen to JP Morgan. They talked about $8,000 gold in 3 years, and we have Goldman Sachs. Those are two of the biggest financial institutions in the world. Goldman Sachs saying we can have $4,900 gold by the end of next year. And you can equate in your mind what that means for silver, right? Silver is due for a slingshot move. It's absolutely crazy. But without further ado, let's get to this. Big news this week, big accomplishment by the United States government that we need to cover. Hold on here. Let's bring it up. Peter Spina, great contributor to the gold and silver community, posted this one. USA, $38 trillion in debt and surging, right? That is what is going on. All the new dollars that are being created are also creating more and more debt, which will only decrease the value of the US dollar. Let's go out to the US debt clock here real quick. And we'll share the screen with you just so we can see it, confirm this for ourselves. We've looked at this ad nauseum. Oh, I hate when this happens. Hold on. I can never get this to go away when they put an overlay on it, but let's see if I can click over here. Nah, it doesn't work. Anytime I click now on the screen. Anyway, we can see it. Let's just circle it. It's official. There's the national debt, always in the upper left-hand corner of the U.S. national debt clock, $38 trillion. We're paying about $1 trillion in interest alone. Oh, I don't know what that is. Sorry, guys. Paying about $1 trillion in interest alone on our $38 trillion in debt, and all that interest that adds to our deficit. And the deficit, right? Our government, a deficit, just anybody who's new, means that's the amount of money that our government spends more than what they're bringing in. So all that interest feeds into the deficit, and the deficit feeds into the national debt, which gets bigger and bigger, and that makes the interest expense get bigger. It is a debt spiral. Okay, that only gets worse and worse and worse over time. And the only thing they can do to keep the system going longer and longer is print more and more and more dollars. That's it in a nutshell. That's all we got to know. So I want you to think, when you think 10 years out, where's the national debt going to be? Where's the value of the dollar going to be? I don't like it. You don't like it, but it's the reality. It's what we're dealing with. But look, we've talked about this enough today. Okay. JP Morgan, Goldman Sachs, big news out of India, big news out of Australia, big news everywhere that just tells us that, guys, I think we are in for a multi-decade run in the price of precious metals. I think crypto can do well. Also, anything that's not a dollar oriented, it's going to be a wild, wild fun ride. I want you to stay with us, right? Come back to the basement, join Susie and myself. It's a wonderful community of people. Leave a comment in the comment section. You don't have to agree with me. I'm often wrong, right? And I've learned things from you leaving great comments. Please subscribe, come back. Okay, take care of yourself, and I will see you, yes, you, next time.